Okay, review number one of the day, third review of the week. We'll start off with Euro GBP, EG that is. Why? Well, you can look. We had claimant count change, which is nothing but unemployment change uh, for GBP. So the only asset that is related to GBP in our watch list is Euro GBP. So let's have a look at Euro GBP. Yesterday we talked about Euro GBP actually starting a downtrend, but we also said that while looking at Ichimoku, we also said that be careful about it because it is just starting a trend, although previously it was very flat, right? Previously, the Ichimoku was very flat. So let's have a look at the Ichimoku of EG. So that's right. So that is where we ended our conversation on Ichimoku. Flat Kumo, yes, it is trending to go down, but still flat, right? And history of Ichimoku is very important. And you can see that the market is now completely turned back up while holding on to that deviation, low of that deviation. Interesting. So what we can do in this case, it will be a bit of a risk. It will be a bit of a risk. We'll come back to this one. Funny, it looks like we caught a trade, but we actually did not. So you can see open of the week, high, high, low, high, 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 low. We have local high highs and high lows. Then we have a big swing high, which actually ends up breaking the market structure. Why? Because this is the low, this is the high that created that low. So we now have a lower high, failed attempt of a lower low, a new high high, a high low, and a high high. And you can see the claimant count change stepping in right here, taking the market further up. So in that case, what we can do is, since we are still in a ranging environment, and this is my range low, we can basically go for a range high, right? So it could end up taking out the last week's high, which is also a strong backing to the point that it's not going to close as an inside week. All right. I mean, all of that could go downhill very quickly if the market just decides to completely drop off from here. But since we've got a signal here and we are into the range low, or rather above the range low now, we can bet safely on the range low. And we can also bet on the fact that the low of the week is in. So what I'm simply going to do is look at that. So that's Tokyo low, right? So let's bet on the Tokyo low being taken. There it is. And let's bet on this Tokyo low holding. But since CPI, right? The CPI. So we're going to give it a bit of a buffer and take it towards the range high. There it is. So Tokyo low can get taken easily, right? And this low should hold, give it a bit of a buffer. Expect this low to hold because this is your low of the week, right? This is your low of the week. It should hold. As far as that concept is concerned, low should hold. We'll come back to that, or I'll make a separate video on that later on. So there's the trade. Very simple. Based upon the structure of the open of the week and based upon the medium time frame structure. Well, I call it medium time frame, but it is just the H1 or H4 structure. Okay. Anyways, so that's it for EG. Now, now I will move on to the trades we were thinking about yesterday, or the setups we made on yesterday. So yesterday, Ethereum, all right, Ethereum. So very nicely holding above the last week's high. We still expect this bid to get filled and the market to go up. Can happen, cannot happen. Bit of a risk on this trade because we are already so far up. Any buy in a local sort of move is risky. So a big dip, like buying a big dip like this, is actually a safe bet. But buying a local move in here is actually not. But we'll still take it, assuming that the trend of the market is still up and is still going to sort of adhere to the technicals of market. So yeah, Ethereum, no changes. The bid is still there. I'll show you my terminal today. So yeah, there's a terminal. Uh, for some reason, for various reasons, I won't show the account balance and the account size, but you can look at the terminal. This is Ethereum. So we're bidding 3.4 Ethereum at 3873. Low risk, and that is the target. So if target hits, we make 1.4, 1.14 USD. If we lose 600 USD. That's it. Nothing special, right? So moving on to the trades we thought about yesterday. So first thing we'll go to is oil. Now, I've changed nothing on here. We said that when we were talking about oil, it was somewhere in there. It was around, I think, 4 p.m. when we were talking about oil. So 4 p.m. is about right there. So we were talking about oil there. After that, what happens? Spikes in, goes pretty much to the target, and now it's grinding back up. Technically, if you go just by the textbook, I would keep this bid alive, but I have not. Right, I have removed the bid. You can see there's no bid or ask on oil. So I'll come back to that. If you zoom out, you can see that the lows on oil are holding. Right, lows are holding, lows are holding. Low will most likely hold. This has to be your assumption if you're in this market. There's no way around it. This low has to hold. This is my assumption, and has to hold. Has is a probability here. So there is a probability, high probability, that this low holds. So we'll assume that this low holds, and we will then take off our bids. Okay. So I'll just hide it momentarily because we need to review it later in the week. And you have to assume that this drive in there was it. That's it. That's the target hit. This is your 1.2x extension. We had a contraction on oil, and 1.2x was hit. So target was hit on oil, and we'll have to wait it out or just leave this asset altogether. Yeah, that's it. Coming to DAX, we have a bid on DAX, right? So yesterday we talked about a break in MS. We said that if that is a forced move down, market will break structure. Not only do we have a break of market structure, we have a high high, high low, high high. Bam. Market wants to go up. That was just a correction, and we will now target. First target is last week's high. Second target is 1.2x extension. Main target is the monthly 1.2x extension, right? So there's target 1, target 2, pretty much target 2 area, target 1, target 2. Okay, T1 and T2. We talked about this trade yesterday. So if that was supposed to be the deviation, should have gone down. Didn't. Ends up breaking market structure, right? Assume this is a deviation. No. Hits the region and goes back up. So one of the reasons why we have such a big stop is because of CPI. So again, the same bit, low of the week should hold. Okay. So assume this is the low of the week. So if this is the low of the week, then this should also, a stop should technically be in there. But I've given it a bit of a buffer because again CPI, and this is DAX. So DAX likes to, nature of it's in the nature of DAX to do this. So it will go up, up, up. If it has to go up, it will do this and then go up. So it has this nature where it likes to come back to the point of origin, even beyond that sometimes. So this is point of origin of the trend, and market likes to come back below this. One of the reasons why the DAX bid is there. You can see on my terminal. That's German 30, which is DAX. There's the bid. There's a stop loss. Looks a bit different because German 30 here is a different kind of market. You can see the gaps. You can see these gaps. So this is not a overnight market, which is also a problem because if it gaps down or it gaps up, you're stuck. Prime example of being stuck is, well, This one. Look at that. Imagine your stops are in there and the market opens there and you wake up there. So you're pretty much stuck and you have to sort of bite the bullet here and take that loss. Not a good thing, but again, I am limited by my prop firm. I trade for CFT, Crypto Fund Trader, and they use the data from this liquidity provider, broker, whatever you want to call them, who does not have an overnight market of DAX. So it is what it is. Okay. Moving on. That is the bid for DAX. I would personally want to bid anything that takes out that low and have my stops there. But since CPI is going to happen soon, so we are playing a bit differently. S&P, same thing, right? This was supposed to take the market down. Okay, why? Deviation, right? Break of MS. Finally, high sweeps. Final high sweep, and the market should have gone down. It has not. All it has done is that it's made a high there, high low, high low assumed, high. Okay, so that's how structure forms, and that's how we bet on the market. Look at that. So we are going to assume that this low holds. And again, since CPI is going to happen, we're going to give it a bit of a buffer. Okay. And that's the target. Technically, you can add another bid here. This one is going to be a little cheeky. And it is a US index, so you've got to be cheeky with it. You cannot just be very standard and technical with US indices. So what you can do is you can buy like a 90% drawdown of your stop. So again, this is when I say 90% drawdown of my setup, I am talking from a statistical point of view, because statistically what I've seen is that US indices tend to put me into 90% drawdown, sometimes 97, 95% drawdown. And that's where that setup is coming from. That's where this setup is coming from. Right? So you can assume that the low of the week holds and you can place it. So that is a valid trade for me. That's a valid trade setup, and I am going to place a bid. Yeah, again, have a look at S&P. So there's my original bid. What I'm going to do is 17 lots. So I'm going to drop this size to approximately 10 lots. And then I'm going to bid 17 lots more on that setup, on this setup, 3.2R. So total loss would be 27 lots, but that's not too much, right? If you calculate 27 lots, how much is that? No calculator on my recent tabs. So 30 into average, I would say 32 into 27, approximately 864 US. Yes, significant, but not that significant that it would put me back, it would just put me back like just one trade, even less than that. So that's okay for me. I can take that loss. Okay. So yeah, this is going to be my second bid. I'm going to place it right now in front of you all so that you can see how do we place bids. Just new order, you go to pending order, put in a buy limit order. 17 lots is fine. Enter the price, profit, stop loss. There we go. Now you can see that there's a bit of a problem here. So this is just price discrepancy between my chart, which is provided by Onda. So my chart data provider is Onda, right? And I don't know, my firm says they use a broker which has similar data to Onda, but you can see here it's not very similar, because my entry here is supposed to be below the body of these candles, and you can see that the entry which I have put is actually at the wick. So technically the entry is there, right? That's it. That's all you have to manage, and you can see that it forms up perfectly there. Okay. As far as this 17 lots is concerned, I'll cancel this bid and I'll place it back with 10 lots. So 10 plus 17, 27. and multiply that with my average stop is this. So we get our approximately 800 something something. That's it. Uh, that's it for S&P. Yeah, I'll take that trade. Nasdaq, we said we don't have anything to do with it, so we'll just leave it at that. There didn't discuss much of gold and silver. And moving on to currencies. So first thing we will take a look at is USD CAD. So funnily enough, yesterday, if you noticed or if you remember correctly, we had a low and we said that it is very important for the market to make another low in order for us to bid that high, right? Bid this area for the market to go down. It didn't, right? It didn't. It did a low and then it made a high, completely invalidating all the structure. So again, modified trigger would be very simple. Modified trigger would be low gets broken, right? Place an order there, bang, done. Okay, that's the modified bit, not modified trigger for USD CAD. That's how we do things. Now think about it, right? Imagine if we just moved without putting in that condition, right? Without putting in the condition that, hey, this low is mandatory. Consider that if we didn't put that condition on our trade, what we would be doing is placing an order there, placing my stops there, and target there, and the trade would have been a goner. It would have been a losing trade, right? This is one of the reasons why we add an extra bit of triggers and confluence, just to avoid this kind of a mishap. You can call it mishap. It's just the market being the market. Now, yeah, USD looks like you got a good trade, but we didn't actually. So again, with USD we had a condition that this needs to make a lower low in order for us to do that. It did not. But if it now comes into this low, it takes out that low, I will place the same order and we would take it down. So again, that's the modified bid. Modified trigger. I keep saying modified bid, but modified trigger. So modified trigger would be a sweep of that low. So a clean break. It doesn't need to break below this low, okay? This is fine. This area is fine. If it has a clean break below this area, we would bid anything above the weekly open to target the last week's low. So trade would look something like this. And then we have a nice place to place our stops. We get more R, and that's trade. Give it a bit of a buffer. Why not? Right? Target a sweep of these guys. 2.8 R. Nice and easy. Good trade. So let's add another there, because this is a trade that we would be looking to take. So that's it for USD CHF. That's it for USD CAD. And as far as NZD and all is concerned, I really don't see any price action. We have a bid for EG as well. So we have quite a few trades, right? We have S&P. We have DAX. Hello, yes. We have S&P. We have DAX. And then we have EG. We have triggers for USD CAD and USD CHF. So currently, we have approximately 1, 2, and third one we're going to place the bid soon. So by the way, if anyone is wondering, this is MetaTrader 5 and this is by my broker. So this is a RL Crates Live. That's my account number. Don't worry, you cannot hack me with my account number. You need a lot more than that. It says it's a demo account because they copy trade you on their live account. So even if you get a live account with CFT, which I have by the way, they will give you a demo account. So you trade on that demo account and then they copy trade you on the live account. That's how they work. RL Crates SL is my you can say the broker. And that's all there is to it. I'll do a walkthrough of MetaTrader 5 if you want me to. Currently, I've hidden the terminal. I don't know why it's flashing like that, but anyways. Currently, I've hidden the terminal. So you can go to View, Toolbar, Status Bar Charts, Depth of Market. Lots of things in there. Fuck that. So, anyways, yeah, lots of assets as well. Go over that later on. That's it. That's it for the review. Bye.